Weekly chart of Nifty. If you see, it has taken support last week around 12,090 or so. And if you see the trend lines, it's exactly connecting from the lows of 10,670 and the previous low of 929. And today, on Friday, rather, it took the support of the same trend line. So now it's becoming sacrosanct that if this violates the next week, which is coming at 12,173 or 12,160 range, then you can see a large correction coming forward. There will be a quick down move possibility open up, maybe during the budget time. I'm not sure. And there's another trend line which is actually connecting from the 2016 lows of 68.25 and the 2018 lows of 10,000, and it has actually violated during the September correction but able to retrace back. And if you see, it took a support during the two falls in 2019, December and January, first week. So if this violates around 11,989 or just near 12,000, so 11,150 and 12,000, sorry, 12,150 and 12,000 are sacrosanct levels where if they get violated, you will see, I think, a very large dip and all the way go back to 10,000. It's a big possibility. Because one more thing is this could be an ending diagonal pattern. If you see this is called ending diagonal, where the tops are connected and the bottoms are connected this way. It forms a five-way pattern. This is wave 1, wave 2, wave 3, wave 4, and wave 5. So the moment it gets over, probably it's over at 4:30, then it goes all the way to the starting point, which is 10,000. So even if you see the RSI, which is at 67 last week, and it dropped to 63 after hitting the high of 4:30. So there is a divergence also appear in the charts. And if you take the daily chart, see the clear RSI divergence, negative divergence, where the stock is made, the index is making higher lows, higher highs, and RSI is making lower highs all the time. So there is a very good possibility at some point this effect will make the index fall much more, and definitely below 12,000 and 11,800, which is again a very, very strong support so far in the last 3 months. So, and also if you see the PE, trailing PE of the last 12 months, this is about 28.5, which is also historic high. Every time when it goes to 28 to 29 range, Nifty falls 20-30%. So, so be aware that it's a budget is around the corner, and that could be either the triggering point or maybe a continuation point where the topping is already done. So just for the tomorrow, which is Monday, there's a possibility of a quick up move towards 1300. I'll tell you why. If you see the Fibonacci retracements for the last fall from 30 to the low of 1289, the 61% comes exactly at 61.8%, exactly at 12,300 levels. So there is a small 50 points left in the rally, which just started 2 days back, and then there could be a sharp down possible. In case if it takes off 12,300 and goes further up, then there is a next resistance comes at 12,356 of 78.6% retracement, which is again could be a B wave or a second wave of the downtrend which has started. So whenever there is a sharp candle like this, indicates a long-term reversal, at least a medium-term reversal. So market will not quickly go back and cross the top of that anytime soon. So this could be a 2-3 months of correction or much more, 1 year correction. This always an example you will get in the charts in many places. So be cautious for the upside and downside. Actually the trades are like whenever it reaches 12,300, in fact you can take a bet on the downside and go aggressive with hedging on the puts, with go short calls and buy hedged calls at 12,300. You buy calls of January and then sell 12,200, 12,100 calls, or you can buy 12,300 or 2,400 puts, so that you're hedged for a small amount, but the downside could be 300 points. So 300 points for 50 points of hedging is 1:6 reward. I think that's worth it. But you need to have stop loss probably 20-30 points. Or you can wait till it crosses or not 12,300 and then take a call. Thank you.